Welcome to the Explainer. Okay, today we're diving into Dollar General's latest earnings report. And let me tell you, it's way more than just a bunch of numbers. This thing is a fascinating look at what's really going on with the American consumer right now.
All right, let's just jump right in with the headline number that got everyone talking. A 9.4% jump in earnings per share. I mean, wow. In today's economy, for a retailer to post that kind of growth, that is a huge deal.
And we're not talking about just squeaking by, you know? The company absolutely blew past what the analysts were predicting. It's one thing to have a good quarter, right? It's a whole other ballgame to deliver results that make even Wall Street do a double take.
I mean, listen to the CEO, Todd Vossels himself. He basically said the results were even better than they expected. When a company outperforms its own ambitious goals, something pretty special is going on.
So, the big question is, how'd they do it? Let's peel back the layers and see what's really driving these incredible numbers.
First up, let's talk sales. We're looking at a climb of over 5%, hitting a massive $10.7 billion. So where's all that money coming from? Well, it's a mix of opening new stores, but also, and this is key, getting more people to spend more money in the stores they've already got.
And this, right here, is the secret sauce. Same-store sales are up 2.8%. But look how they got there. It's almost a perfect split. 1.5% more people walked through the doors, and each person spent about 1.2% more. You know that kind of balanced growth? That's the holy grail for retailers. It's exactly what you want to see.
Okay, so this is where it gets really interesting. Who are all these people shopping at Dollar General? Because the answer, well, it tells us a ton about what's happening in the wider economy.
Think of it like a two-cylinder engine firing on all cylinders. On one side, you've got their loyal, core customers. They're coming in and spending more. But on the other side, you've got this huge influx of new shoppers, people from middle and even higher income brackets who are now trading down to find better value.
So why is this such a big deal? Well, when you see everyone from all income levels flocking to a value store, it's a huge signal. It tells you that hunting for a good deal isn't just for a specific group anymore. It's on everyone's mind. The whole game is changing.
And a huge part of their appeal is pretty simple, right? They've got more than 2,000 items that cost just $1. If you're feeling the squeeze on your wallet, that's like a siren's call you can't ignore.
And you don't have to take my word for it, just look at the numbers. Sales for those $1 items grew at twice the rate of the rest of the company. It couldn't be clearer what people are looking for. Straight up, simple value.
Okay, so getting all these new customers in the door is one thing, but how do you keep them coming back? Well, Dollar General has a really smart playbook for that. It's basically a three-step plan. First, they're making the stores themselves better. Second, they're jumping headfirst into digital and delivery. And third, they're getting really good at the behind-the-scenes stuff to boost their profits.
So step one, sprucing up the stores. They're not just building new ones, they're pouring money into their existing locations. And check out the results. These remodel projects are boosting sales by up to 8%. That is an incredible return on investment.
Next up, digital convenience. And man, they are going all in. Their DoorDash partnership is huge, covering over 17,000 stores. And sales are up, wait for it, over 60% from last year. Now they're adding Uber Eats to the mix too. And the best part, 3/4 of these orders get to your door in under an hour. That's convenience.
Okay, so we've seen how they're bringing in more money with better stores and fast delivery. But how are they keeping more of that money? How are they so profitable? The answer is all about getting the basics right.
They're focusing on a huge profit-killing problem in retail called shrink. It's basically all the stuff that goes missing. Whether it's stolen, damaged, or just lost because of a clerical error, it's inventory they paid for but can't sell. And it's a massive drag on the bottom line for any retailer. So by really zeroing in on this shrink problem, Dollar General boosted its gross profit margin by 108 basis points. Now, that might sound technical, but it's just over a full percentage point. In the world of retail, that is an absolutely massive improvement.
Let me put that another way for you. Just this one thing, getting better at controlling their inventory, was responsible for more than 3/4 of their entire profit margin growth. That's not just smart, it's a masterclass in operational excellence.
So when you're killing it on sales and you're becoming way more profitable, what happens? You get confident. And that's exactly what's happening here. The company is now setting its sights even higher for the rest of the year. And you can see that confidence right here. They've raised their official predictions for pretty much everything. Total sales, same-store sales, and earnings. It's a huge vote of confidence in their own strategy, and it shows they believe this shift towards value shopping isn't just a blip, it's here to stay.
So when you take a step back, what this all means is that Dollar General's amazing quarter, it's not just a story about one company. It's really a snapshot, a real-time look into the wallet of the American consumer and what they're prioritizing right now.
And that leaves us with one final big question to chew on. As more and more shoppers from every income level are seeking out value, is a company like Dollar General becoming the new barometer for the health of the American economy? Something to think about.